Let's take a direct route right now to our halftime headliner, Charles Schwab, Chief Investment Strategist Sonders. Liz-Ann, great to have you here.
Thanks for having me.
All right, so we're talking a little recession possibilities. Where do you stand in this camp? Do you believe we're headed towards a soft landing, a hard landing? Are there any signals that you're watching that lead you to your conclusion?
Well, we've been saying we're in some version of a rolling recession for more than a year now because of the unique nature of the pandemic and the hits that many of the segments of the economy that boomed coming out of the lockdown phase subsequently went into recession territory. Housing related, a lot of consumer-oriented goods, manufacturing. We've then just had the offsetting strength on the services side. We're starting to see cracks on the services side, but we're also seeing a lift now in housing. So to me, what's missing in the debate of recession versus soft landing are those nuances, because we've had hard landings in some of those areas. To me, best case scenario is a continued roll through where, assuming services gets hit, that you've got some offsetting stabilization. That said, gun to my head, recession, no recession in terms of an official call by the NBER, I think yes. And that's the massive decline in the LEI, the inversion of the yield curve, both magnitude and duration, lending standards, liquidity drain, falling money supply, et cetera. So
listen, let me just push back for a second. You're talking about nuance, but here's Jay Powell when he was on Capitol Hill. Given how far we've come, it may make sense to move rates higher, but to do so at a more moderate pace. There wasn't a lot of nuance there.
Well, but he continues to say data dependency, and he pushed back rightly so on this notion that 2 rate hikes, as shown in the dots plot, is not a path. It's not a predetermined path. It just represents what, the members think at that moment in time. Yes, he said July is a live meeting. Yes, the CME tool, which you guys looked at before, shows a pretty high likelihood of a move. And at this point, I'd say yes. But you've also got data between now and then, both on the labor market front and the inflation front. Maybe 1 or 2 more tops. I think Powell is trying to send the message about pricing out rate cuts, at least into 2024. And I think subliminally, that's probably the message he's trying to get out.
Liz, it's Jim Lebenthal. Great comments on the rolling recession. I happen to agree with them, and I certainly take comfort, as I think you alluded to, with the housing market showing some green shoots here. A question for you on this hard landing versus soft landing versus rolling recession. It seems to me that the sine qua non is the labor markets. And I wonder what you think about where initial weekly jobless claims are, 264-odd thousand. From a historical perspective, that actually isn't that high. But it certainly has a lot of people talking that the cracks are forming in the labor market and that they could get worse. What's your outlook on the labor market?
So the not historically high is a level analysis, not a rate of change.
Yes.
And the move up off the low is well beyond the average percent of an increase off a trough in claims at the start of recessions. To me, I don't look at claims in level terms or even things like payrolls in level terms and say no chance of recession, because payrolls actually, of the last, 12 cycles, you've had payrolls growing in many cases by triple digit at the point the recession starts. So I think claims are up enough. The one saving grace so far is that continuing claims are still trending down, suggesting that even though there's more people filing, many of those people don't stay on unemployment insurance. They're finding another job. So I think we're at the point in the labor market is we have to peel at least one layer of the onion back with all of these data points to get a true sense of what's going on. And to me, the biggest tell potentially is the shrinkage in the hours worked. We know there's some labor hoarding going on that may continue, but the hours worked, I think, gets directly to the demand environment, which has weakened.